With that, let's move on to the third panel discussion on the topic, Accelerating Next-Gen Banking through AI powered by DPI, Fintech and Open Innovation. The discussion will explore how AI, digital public infrastructure, and Fintech collaboration are shaping the future of banking in India. It's my privilege to invite on stage the panel of speakers for this session. Ms. Lalita Natraj, CEO NPCI Beam Services Limited. Ms. Namrata Singh, Vice President, Sector Head BFSI India Business, Wipro. Ms. Adelia Castellino, Co-founder and Managing Director in Solutions Global Limited. Mr. Suvendu Pati, Chief General Manager, Department of Fintech, Reserve Bank of India. Mr. Avinash Raghavendra, Chief Information Officer and President, Information Technology and Retail Operations, Axis Bank. Mr. Tata Venkat Venugopal, Chief Technology Officer, Union Bank of India. And our moderator for this session, Ms. Yuvika Motwani, Associate Partner, McKinsey & Company. Can we have a big round of applause for our third panel, please? Thank you. Over to you, ma'am.
Hello. Hi, a very good afternoon to everyone. I hope you all had a great lunch and have been enjoying the sessions so far. I think we're all very excited to talk about this theme. As you're all aware, today India is leading one of the most consequential banking transformations, not just from a domestic perspective, but really at a global stage. In less than a decade, we have built one of the biggest at-scale DPI infrastructures that exist globally. Right? I don't need to quote the numbers, but just last month, UPI crossed more than 23 billion transactions, 21 billion transactions at a monthly rate. Similarly, there are 23 billion KYC verifications, Aadhaar eKYC verifications that have happened till date, and so much more. This has really transformed the entire economics of banking. However, what is now changing is the intelligence layer on top of it. AI has gone from becoming something that was limited to the back office as an efficiency tool to becoming central to decision making, whether it's for credit, fraud, hyper-personalized engagement, or even thinking about operational resilience when it comes to an era where we are in of instant transactions. Combined with this is the fact that the lines between banks, fintechs, and technology players now are blurring. Open APIs, embedded finance, and more has become the norm rather than a question, which is raising new questions on risk, ownership, as well as a competitive advantage. The question that our banking leaders are asking now is not about whether to adopt AI or to do a use case or not, or whether to partner with a fintech or not, but we have gone beyond to think about how do we orchestrate the AI plus DPI ecosystem in order to build a sustainable banking operating model that works for individual banks. And that's the core issue that we'll be discussing today as a panel. Luckily for us, we have a very eminent panel with us who's been leading on DPI and AI across the relevant fields at the very front and in the trenches. So without further ado, I'll get us started. And maybe I would love to bring you in, Mr. Pati, to get us started on the panel. DPI has transformed financial services. That's not a question in anyone's mind. Having said that, what is the next wave of DPI transformation actually going to look like, according to you? And how does AI really amplify this opportunity to create the next generation of resilient banks?
I hope I am audible. Thank you for having me here. And first of all, let me take this opportunity to wish all of you a very happy new year in this first gathering. And as I said, as we understand, AI is no longer a esoteric term. Starting from children to everyone, we are now starting to use it, and very much familiar with now. And just before I go to the main question, I would just like to bring your attention to the Free AI Committee report with the Reserve Bank of India published, It came out in August 2025. And now I am happy to report that, and I was also part of that committee, and I am happy to report that the 7 sutras or 7 principles, guiding principles that the committee had laid out, starting with trust, innovation over restraint, customer first, people first, and all those, they have been now adopted by the Government of India as the principles for AI governance for the country, cutting across all sectors. So, I think those guiding principles are fundamental for any entity to look at those high level principles. Coming down to specific India, no doubt India has built the DPIs that we are all familiar with. Now, how AI can sort of augment that, and what are the potential opportunities that we see? Clearly, first of all, despite all our innovations in payments, we have not witnessed so much, I mean, despite all efforts on Jan Dhan and banks' efforts in opening bank accounts and financial inclusion, lot has been done. But still, I would say that there is a large segment of population who still remains to avail credit in the manner that they want and in the time that they want. So, I strongly believe that AI has the capability of using, analyzing and data from alternate sources and building credit models that would help us in reaching further or furthering financial inclusion. That is one space clearly we should be striving for. Second area, I would say that I strongly again feel, and some work has already been begun by NPCI and entities like that, is while in this digital journey we should not be creating what we call as a digital divide. Some people have the access to the apps and services, while majority do not are not able to, because they are not familiar with English or they are not very tech savvy. Now, can we bring conversational banking, conversational payments, conversational, like somebody speaks out and the loan application gets filled out? These kind of activities AI can facilitate. And so those kind of applications where we make our society or people more inclusive through the use of technology, through the use of AI, they come on board and they also equally avail these services. Third segment where we strongly feel there are potential opportunities, like how do we integrate disabled or visually challenged, those segments of people into our financial services segment. I think AI also can help a lot in assistive technologies, improving the assistive technologies and building use cases which can further this impact and reach broad base this area. And third area, I would say that fourth area is the cyber security area. To maintain the trust in the digital ecosystem and to leverage from the DPIs that we have built, it is our shared responsibility that the people continues to have trust in the digital ecosystem. And to maintain that trust, we must have systems where transactions do not fail, or do not, if they fail, there are redressals available quickly. And also, so in this regard, at least now, we should maintain our, improve our systems, detect patterns of intrusion, patterns of develop AI tools to detect cyber incidents, be more better cyber prepared. Because cyber actors, bad actors, they do not need any sort of UAT testing, firewalls, or go through a cyclical process, but they will keep on attempting using AI as a tool for attacking. So, it is also like in Sholay there is a dialogue, Loha lohe ko katta hai. So, AI can become the double-edged sword that it is. So, AI also itself can develop solutions to make our systems safe, sound and trusted. So, these are the new areas of application I strongly see that we must pursue. And one element of recommendations from the Free AI Committee report that I would like to bring here, it talks about innovation over restraint. And what we mean by that, everything else remaining equal, we should not hesitate in experimenting on coming out with new use cases, new ideas. So if you do not apply the technology, we will never be reaping the benefits of the technology. So the apprehensions we have, it must not be stopping us from innovating. So if you are building a car, first you should be building for speed and scale, how it can reach the destination in the quickest possible time in a safe manner. Now, unlike EU Act, which first sort of started developing a brake before they went on to develop speed. So we would also need brakes. If the car needs to run faster, we also need good solid brakes, but that should be built afterwards, after we do enough experimentation, we do enough innovation. So yes, I will come about on if the next round permits, on how do we put in the right guardrails in terms of policy framework, governance framework, and we will touch upon that subsequently, but for the timing I will stop here. Thank you.
Yeah, and Mr. Avinash, if I bring you in over here, as someone who's a consumer of DPI and someone who's innovating on top of that, for you, what does the AI plus DPI transformation actually look like? And as someone who's also leading technology for the bank, what are the fundamental changes that banks should think about in terms of their technology, data architecture, and operating model layers to deliver such innovations?
Okay, let me apply the consumer lens first. I mean, if you look at DPI, what are the things that DPI has currently given to, to the country as such? Very clearly, from a, it has allowed for absolute on nation scale transaction processing, okay, in form of UPI. It has allowed for identity in form of Aadhaar. It has allowed for consent architecture. If you look at examples like account aggregator and others, right? Now, all of these are obviously areas where the financial space can necessarily sort of come in. Now, the moment we actually include AI on top of it, what it does is it basically sort of introduces three more elements, which is speed, which is scale, and the third one is dependability. Okay. And for banks, this actually makes up for a very heady cocktail. I mean, if I were to sort of use that particular analogy, right? Why do I say that? If we speak about something like we want to sort of, today when we are giving credit out there, we will typically look at something like a CIBIL score. Okay. Now with the technology which is out there with us in form of DPI, which allows for account aggregator, and in form of AI, a combination of the two, I mean, we can actually sort of scan through transactions much more rapidly than any time before. And the best part of it is that, okay, it is something which is very egalitarian. I mean, we need not actually restrict ourselves to the top of the society, or we can essentially go right to the bottom of the pyramid over here. And there are umpteen such examples. I mean, if you look at the very advent of something like Bhashini, okay, it has sort of now made literacy or the linguistic skills. I mean, at least the promise over here is that both literacy as well as linguistic skills is going to be something which can be there back and beyond. Okay. And a lot of the financial offerings are going to become neutral from that particular perspective. The other area that we need to sort of keep in mind over here is the fact that everybody speaks about agentic, right? So essentially, in the world going forward, we are all likely to have some kind of an agent bot, which post consent, post passing the privacy norms, will be able to sort of introduce transactions on behalf of every user. So just imagine a scenario where there are some idle funds lying in your account, and at the end of the day, I mean, it is able to move the funds to a slightly better returns kind of an investment, or maybe to to sort of pay off a loan on which there are high interest rates. Now these are all combinations using AI, and for that matter, I mean, when it comes to transfer of funds, I mean, you could actually end up using a UPI pay kind of a mandate, right? I mean, straight away. So this combinations over here are immense. The opportunities are great. And when you speak about AI in terms of safety, and you mentioned resilience, I mean, there are thousands of facets over here. I mean, we can talk about frauds, where typically, I mean, we used to have rule based engines which used to sort of do stuff for us. Now we can move from rule based engines to, you know, thousands and thousands of behavioral signals. It could be coming out of account aggregator, it could be coming out of UPI transactions, it could be coming out of a whole bunch of other things, right. It could be around the fact that, okay, somebody is trying to do an Aadhaar transaction, whereas simultaneously there is a UPI transaction which is happening over here. Questions can be asked. There is an ability to sort of, you know, Suvendu sir basically spoke about the free AI policy framework and also about, you know, the implications around cyber. Frankly, the problem which every SOC team today has is that, okay, there are way too many signals which is coming, right. And again, it is a rule based ingestion of the signals, rule based understanding of the signals, which AI is sort of, even in the little that we have sort of implemented right now, we can actually see a lot of signals, you know, which sort of prioritizes in terms of risks that we need to be paying our attention to. And if I were to extend the same to something as basic as SREs, if there is a network issue, if there is an app issue, if there is a downstream operating system issue, I mean, all of these signals we are able to sort of, you know, combine and get much better reading. You had a second point to your query, which is in terms of, you know, how are we as a consumer sort of rewiring our applications and all of that. Now, this is an interesting part, right. Nobody quite knows how directionally this is going to go. Now, if I look at a chat GPT, the interface is very different, right. I mean, it's a very, you ask a question and basically a response is coming. So, quite possible that, okay, the engagement layer is going to look something very, very similar in the future. I mean, today if you look at any of the mobile banking apps or just about any financial entity, right, I mean, it opens up to somewhat like a dashboard, and within the dashboard there are going to be links which will allow you to do a transaction, download statements, do a bunch of activities, right. We could be pivoting towards an area, towards a world, right, where it could be a simple interface, almost like a Google like an interface, where you simply punch in a command and it is able to sort of, you know, give a response to that. So, the engagement layer is bound to change. I also feel the engagement layer will have a huge bunch of personalization, because not everybody might be open to this kind of an interface. I mean, people will have their choices. In the downstream, well, I think most of us are bankers over here, or, you know, people who are working with banks. If we speak about the architecture, well, the sidecar thing in terms of hollowing the core, etc., is, you know, just going to get intensified. Very clearly, the transaction pattern is going to sort of scale big time. The one area of focus for all of us is also, you know, the entire data architecture piece, because the way we are consuming data is going to, you know, explode manifold. So, typically we have had OLTP systems, and then we have had OLAP systems. The area that we are focusing on right now is, you know, something called as HTAP, which is a little bit of a hybrid model between the two, in terms of how do we do real time analytics at scale. So I mean, all put together, I think there is 5 years down the line, when we look at this entire architecture that we have working out today, I suspect maybe about 10% or 15% of that is going to remain, and everything else is going to definitely be requiring a reshape for us to sort of, you know, simply stay competitive.
I think you made a very interesting point on how the engagement layer is going to change with personalization, new AI use cases. And Lalita, if I can bring you in over here as someone who's been leading innovation at the forefront on the DPI stack, if you were to imagine for all the bankers that are over here and all the fintechs that are over here, what are going to be the 1 or 2 AI native products or journeys on this DPI stack that is going to completely change for consumers, which the bank should start actually thinking about?
Sure. Thank you. A very good afternoon and a happy new year to all of you. I think the consented layer of DPI is going to give a very clear, you know, boundary to the AI to work on, and that's a very important next step, where banks can move from a point in time assessment to continuous assessment. So, when you submit your application for, let's say, an underwriting, you typically assess a customer at that point of time of underwriting, and then you probably review the underwriting over a period of time when he or she makes a repayment, right. Imagine a situation where I have submitted my requirement for taking a loan and you are continuously assessing me within the consented boundaries of DPI, right, basis my information submission, basis my UPI payments, basis where I am able to give my bank statement through an account aggregator. So, you do not need to necessarily wait for me to become a 30 plus to warn me. You do not necessarily need to wait for me to ask you for a credit line increase to really give me a credit line increase. So, I think the cost of underwriting and the cost to serve and the cost to collections will become very, very important levers to sort of bring down over the few months and years using the consented architecture of DPI plus AI. This will help us expand credit lines to a very smaller line. Today banks find it unviable to give credit line beyond a ticket size because the cost of underwriting, the cost of collections is a particular number, right. So, if you are able to lower that, then the smaller credit lines make a lot of sense, and repayment is becoming a very, very simple process today because most of them are used to UPI, they know their digital score. So, I think these two put together, DPI which gets you immense exposure to data, but consented, so that you really do not go all over the place without the customer's privacy and data privacy getting impacted. AI which helps you crunch the data and move you from a point in time assessment or a point in time underwriting to a continuous assessment and underwriting process. I think this is very important, and like Avinash said, the engagement layer is going to change, right. So, from a formless to a paperless to a presenceless, you may end up being a formless layer. So, you may not need to necessarily submit an application form to get assessed, but at the same time we have gone into a world where most of us use smartphones. There are feature phones which still exist, right. At the same time, when we are talking about AI and DPI, we may still have to solve for a population which will not be privy to this information and which will not have digital footprints in various forms. So, it is important for us to make sure that there is a continuous inclusion factor and no segment is left out. So, I think the power of bringing the two together can unlock a lot of value potential.
Absolutely. I think you made a very important point on consented data, and Mr. Venkat, if I can bring you in over here. Account aggregator has been one of the key innovations as a part of DPI stack, right. There are about 200 million plus A records or customers that are now actually sharing their financial information via A. The great thing about this has been that we have also been able to extend it to MSMEs, and multiple players are actually using it to give fast-tracked approvals and being able to underwrite basis cash flow. As a banker, over the next 24 months, leveraging DPI plus AI, how do you believe that credit underwriting for MSMEs can be enhanced further?
Yeah. Thank you, madam. See, here I would like to take this question in three parts. First, where we are. Second, since your question is specific to the MSME, where we stand in the MSME, and what are the bottlenecks we are facing it. See, we have started in a very beautiful way of first having the mobile, Aadhaar for the identity, and then the Jan Dhan accounts. So, that JAM Trinity we have completed, and then we have come to the UPI ecosystem, the beautiful payment ecosystem. And thanks to the initiative taken by the regulator and the DFS, Government of India, it is an immensely successful system. Then we have come to the account aggregator, which is basically interoperable. I can know the statement of account of other bank, and based on that I can do the cash flow based financing. That is the basic concept. So, we have achieved a good level of maturity. Now that all the ingredients are there, how to serve the good food, that is the question. So, where that food will go? The MSME, like you have told. MSME is a sector which is always credit hungry, correct? And if you see to the contribution to the GDP, it is around 30%. Second biggest employer post agriculture. If you see to the export, it may around 45 to 50% it contributes. So, now comes how we are going to meet the credit needs of them. In MSME, unlike the large corporates, time is much important. Immediately you have to take a decision. They cannot wait for months. our earlier systems, using the traditional credit processing, all these things used to take a lot of time. Now, since everything is digitalized, we can take the decision in minutes. So, there the power of AI and AA will come. Maybe after some time, maybe 1 year or 2 years, I feel there will be inflation based limits. That concept may come. Like we have got the EBLR, MCLR, repo rate, some benchmark rates are there. So, maybe we can finance inflation based or local issue based financing. The limit may be 1 lakh, limit may be 10,000, but based on the seasonal availability of the fruits, seasonal availability of the raw materials, how the cost is moving up and down, the limit will be auto adjusted without the customer asking for it. That may be one of the use cases I am thinking it. Second, regarding you are telling the bottlenecks, one of the biggest bottlenecks in the digital era is the accuracy and right availability of the data. Right data should be there. If data is not right, all the decisions will be wrong. That is one of the bottlenecks. Second, if we see what is the awareness level. See, digital is totally driven by the data and awareness. These are the two things. If these two things are not matching, the chances of fraud going up is very high. So that we have to also see how do we will use the AI to control the fraud. Like Pati sir was telling, we can use the AI. लोहे को लोहे काटता है सर, आप बता रहे थे सर. That we can use it. Third, at the infrastructure side, see all of the banks, core banking system is still monolithic system. How to change that? That is basically data storage system, doing the transaction and storing the data, but not analyzing the data. And all these things are based on the data analysis. So in this way, the things will go. That is my takeaway. Thank you.
Thank you, Mr. Venkat. I think Adelia would love to bring you in over here. I think everyone's, all panelists have mentioned amazing innovations as a combination of DPI and AI. And one of the key end objectives of that is to enable inclusivity, inclusive financing, and being able to reach the last mile of customers. These innovations are going to need an operating model shift in the ecosystem. What are your thoughts on how can banks, fintechs, and technology players actually think about the new operating model that's required to make this come alive?
Yeah, the main, good afternoon and Happy New Year. The most important outcome of all the efforts that over the last 10 years, the banks, the regulators, the fintechs, and all of us have put in, including the DPI layer, is bringing the customer engaged with the banks, bringing them together. The whole ecosystem has changed. Now the best part of intelligence is how do we monetize on this inclusivity. So we should not look at inclusive growth as a cost. It is actually going to be a profit center. Intelligence, what we build over the DPI layer, over the innovation layer, and the customer engagement layer is going to give multifold opportunities for the banking sector and ecosystem players to monetize. While DPI has given India the reach, intelligence is going to give the economical power and benefit of the DPI layer. Now what has really changed? While the earlier bank-led customer engagement is now getting changed to the digital journeys. What is changing is basically your one-time transactions on lending to a lifetime value of engaging with the customer. What is really changing is how do you monetize? So these are actually opportunities not only from a cost point of view, these are opportunities from revenue point of view. The banks and the fintech and the ecosystem players who understand the value of intelligence over the DPI layer and who can monetize and look at the customer engagement would be the ones who would be the beneficiaries and the winners of the future. This is the time for people to understand the value realization, make the whole ecosystem viable for the players, including majorly the banks who have invested. And at the end of the day, how do we monetize and realize the intelligence per customer return on investment rather than the traditional way of return on investment on your loans or the funds that you have given. But while we are doing this, we have to be mindful and be very careful in terms of the risk that we have to mitigate. How do we make sure that we build an ecosystem that is called TRISM, trust, risk, security management protocols, and ensure that when you have inclusive growth, you have vulnerable and first time credit customers in the system. We take care of their needs. We don't sell something which they don't want. We give them exactly what they want and make the whole value chain viable to the end customer, and this is how benefit from the investments.
Thank you. Ms. Namrata, would be great to bring you in over here. As someone who is seeing AI transformations not just in India but globally, AI for many institutions still remains a buzzword or a hype, right? The amazing innovations that everyone's talked about will need a real transformation plan to bring this from a pilot to an at-scale transformation to reach the last mile of customers that we've all spoken about. According to you, what is it that banks need to think about to take AI from pilots to an at-scale innovation, specifically for the DPI innovations that we have spoken about?
Thanks. Thanks, Yuvika, and good afternoon, everyone. I think the way we are looking at this, at least from Wipro's standpoint, is let me just start while you're talking about scale, is that everybody here is on a journey, right? It's not that anybody's totally been able to figure this one out. We specifically look at having to look at their enterprise strategy as far as AI is concerned, which typically means what is the value creation that you're wanting to get out of this, what is the clear ROI, the ethical implications of AI, what are the biases you must get rid of. We're also looking at speaking to our clients in terms of, instead of doing multiple value creations, what is the clear ROI where you actually should be spending your time and money. One of the learnings that we've got in this journey is also about that while AI specifically talks about processes and data, what are we doing about people and processes? Because this is really what it is all about, getting the human component into the loop. The human loop component is extremely critical, and we are very, very focused on making sure that while there is a lot of discussion on AI tools, AI models, humans are not kept out of this loop. Lastly, I think from a strategies perspective, something that we have seen scale much more globally as opposed to India is the fact that, let's say we have today 50 value streams across all of the typical banks. They will have around 50 to 60 value streams. In each of these streams, what are the critical ones that you must adopt? Hyper-personalization, for instance, comes across as one of the most critical ones, and that seems to have been able to scale up much more faster than many of the others. So that's where we are.
Mr. Pati, maybe I think a critical question at this juncture for you, as banks are thinking about the innovative use cases, changes in engagement layer, scaling up technology and cleaning up the data to make this available, what are the right kinds of operational guardrails that need to be put in place by the ecosystem to be able to use this effectively and ensuring that the end consumer is protected?
Yeah, this is a very right question to deal with, and in some sense we have also in the free AI report we have given high level guidance on these dimensions. But let me just touch upon a few principles which would serve, which we feel would stand the test of the time, and while benefit from the innovation, will also say use them, as I would say that responsible innovation in a sense bring in. First, of course, is the governance layer. So, and in every institution, and especially in financial institution where they are touching with the customers' money. So, it is all the most important that the customer needs to be protected at all the times. If there is a loss or a to the customer because the bank or a entity is using AI in its systems and processes, customer harm should not be there. That should be the first principle. Then the board level policies must articulate the clear lines of responsibilities, and also the traditional product approval processes, they must be augmented to take in the additional AI risks that come into before the products get rolled out. Third thing possibly that we should look at is not only about the bringing in some models and implementing it, but look at it from the entire life cycle management point of view. If you are bringing or embedding any AI model into the product or service, starting from the service delivery, of course, over a period of time there would be because of the data changes, there would be model drift. How do we really check the model drift? How do you bring back the model and bring the accuracy level and reduce the false positives as the systems go ahead? All said and done, we must all realize that AI is a probabilistic system. It is a non-deterministic system. So, there are bound to be some mistakes. So, it cannot be a foolproof system like a rule based system. So, we must be as financial institutions, we must also embed how do we make it, I would say that AI systems or our processes more understandable. I am not deliberately using explainable, because understandability means different things to different people. If I say the customer wants understandability, they would like to know how this service was offered at this price, or why was the service denied. But from your internal auditor of a bank, understandability would mean different things, because it will say how this decision making was done. For a regulator, we would like to see, or a supervisor, we would like to see, they will come and see whether there are enough guardrails and systems checks and processes in the AI lifecycle management. So, I would say that understandability should be the principle that everyone should be look at to make the systems understandable. We need not get paranoid about this explainability in every sense. Some low risk items where some summarization is happening, you are not really taking a credit decision or a risk. Therefore, we have to again calibrate all operations into 3 tiers, let us say high risk, medium, low risk areas, and decide thresholds as to what kind of systems should work. And of course, this cyber thing I have already told, but going forward, I think the governance, removing bias, talking about understandability and embedding explainability and protecting the customers, it should be the cornerstone for all developing systems. And last, how powerful a technology may be, it will never be adopted if it does not enhance trust. So, all our efforts, all systems, processes that we build, we must be conscious of this underlying overarching principle that all our activities should enhance trust. That is where I would stop. Thank you.
Thank you, Mr. Pati. Maybe would love closing comments from all the panelists. We've had a very rich discussion around what are the key use cases, technology that's required, what are the guardrails that should be there. As key players in the ecosystem and part of this ecosystem, what do you think the ecosystem, what is the one big move that the ecosystem needs to make over the next 2-3 years to collaborate more to ensure that this DPI plus AI reality helps bring in the next wave of resilient banking? And maybe Lalita, if we can start with you.
I think I would just say we will need to understand this like the co-panelists have said, and play this in a very, very guarded manner. A long time ago we had a lot of ML models, but it remained supervised models for a very long period of time, right. So, it is important for us to understand, get confidence and play in a very guarded manner and unleash the potential for areas which are genuinely problematic, but under very, very guarded supervision.
I think from my point of view, I think the collaboration between the banks, the fintech and AI together can bring about a revolution, right. Things like we already have models which are based on digital Aadhaar, DigiLocker, UPI. So, if you can bring them all together, you can look at issuing credit notes and all in minutes of time, right. So, that collaboration between these 3 forces is going to be a game changer.
Yeah, so federated intelligence, where you do not actually share the data, you only share intelligence between the local and the global players. So, this would bring in an ecosystem of trust where the DPDP laws would be compliant and at the end of the day make the system vibrant and reliable.
Okay. Since she touched upon DPDP, I would just add one more dimension to it. The bank should look at anonymizing data in a serious way. There are privacy enhancing techniques, and I would say that banks are collecting a lot more information that actually what they need in some sense to do their activities. And with the DPDP Act and rules in place, it is a time to revisit what actually we require. But last message I would like to leave with, do not stop innovating for the fear of a few mistakes that a probabilistic system like AI would have. First start innovating where it will have a impactful application. Then we will think about how do we embed it into our ecosystem and harness the benefits. So keep experimenting, keep innovating, and whether within the regulatory sandbox or within the sandboxes of your own entities, which does not require any regulatory relaxation.
I think just like the entire digital public infrastructure that we have, we need to very seriously think about, do we need a sovereign AI in some shape and form, and if you look at what is essentially happening all around us, and if you really want to innovate, come up with solutions for the country, I suspect at some point of time all of us will need to sort of come together and very seriously think of sovereign AI as a path.
Yeah, just like sir has told, we should move towards the need based, consent based data collection. That is the first thing. Second, taking any AI project not as a tech project but as a business project. The moment business owns it, the success is ensured. That is my say.
I think thank you to all the panelists. As Mr. Pati said, don't stop innovating. I think all of you have made great suggestions for the banking leaders that we have today. It will be very exciting to see how the DPI plus AI innovation looks 1 to 2 years from now. Thank you so much for your time.
That was very insightful discussion. A big thank you to our panelists for sharing your expertise and perspective on AI, DPI and Fintech. May we request our dignitaries to please come forward for a group picture, please.